Well, Midwest farmers are facing massive flooding after weeks of heavy rain. Wheat and corn crops are being destroyed as water continues to disrupt business. Scott Shelladio, Senior Vice President of Derivatives at TJM Investments, joins me now. And Scott, I know you come from a farming family, you have farming in your background. Taking a look at what's happening in the Midwest with the flooding, how big of an impact is it having on our farmers?
It's huge. It's the wettest we've ever seen it before. We're going to get a corn crop in the ground, but these things slowly take time to develop rather than a hot and dry. You see a lot of investors and speculators get out in front of hot and dry and hurry up and buy the market up quickly. We just don't know how bad this is going to be until we start seeing the yields at the end of the year. So yes, it's very wet. Yes, we've got a lot of corn acres that haven't even been planted yet. Those are going to be big problems going forward as well. So we're not going to have as much corn at the end of this year anywhere near as what we thought we were going to have.
Well, since we're not going to have as much corn, will the higher prices then lead to higher costs for some foods at the grocery store for all of our viewers out there?
Yeah, undeniably it will be, but it won't be a massive impact. I mean, yes, things that have corn in them will slowly but surely go up in price. But again, like I said, this is something that's going to take time to develop. It's kind of like that big ball on Raiders of the Lost Ark, right? It's rolling, it's slow, it's huge, but it's not going to give us a lot of information every day like a hot and dry summer would. We're going to slowly but surely see how much this damage is done and how much we've lost in yield because it's been so late to get in the ground, it's been so wet to get in the ground, and a lot of places couldn't plant at all. So it's definitely going to be a problem. There's no denying that. The prices have already been reflected. We've rallied almost $1 off our lows, and we've now come back a little bit to settle in, but it's still going to be a story that takes time to get out.
Scott, the other event that's impacting farmers nationwide, I guess you could say, is the trade war between the U.S. and China. What do you think is having a bigger impact when it comes to causing the most pain? Is it the tariff war, or is it the flooding that's happening?
Well, that's a great question because the answer is this. You know, when you have a weather situation, it's more of a short-term impact, right? And even though it can still take 6 months, it's a shorter-term impact. With the trade war, and I think after May 10th, that was my watershed moment, no pun intended, where I thought that, hey, this could go on a lot longer when the Chinese backed out and such, so that this could now be something that's very protracted. So that's a much longer-term issue. And the thing about that is that we really don't plant soybeans until we get all the corn done, right? You do corn first, then soybeans next. So the way this has been shaking out is that corn has been very busy. There's been a lot of volume and a lot of activity because of the wetness and the coolness that we've had in getting the plant in the ground. Then you take a look at soybeans on the other hand. Yes, they've rallied in sympathy with corn a little bit, but it's been nowhere as busy as corn because they're suffering from a long-term problem. And that's going to be the Chinese tariffs. So the long-term problem is affecting soybeans. We're not quite there yet to put them in the ground, so they're going to languish a little longer here. And the short-term problem, which is Mother Nature, is absolutely affecting corn. So two different things affecting two different things.
Scott, President Trump has offered assistance payments designed to offset some of the loss of the income that's happening because of the trade war. When you take a look at it, when you talk to the farmers out there, do you think that his policies at all have been helpful or will be helpful in the future?
Well, I mean, if you're really skeptical, you'd say that he's still buying votes, right? I mean, the farmer has been behind him. They still support him. You know, we want to be the farmers to the world here. So we just want China to trade fairly. That's all. So there are going to be some unintended consequences, and obviously the farmers stand in that way, and that's why they're getting this rebate. But, you know, that's really only affecting soybeans. China doesn't really deal in corn with us, see? So that goes back to your previous question. So right now, that payment that the farmers are getting, a large proportion of that goes to the soybean farmers because those guys are the ones that are really getting affected, not as much the corn grows. So that's also a very, very interesting thing. And they still have the support, or this president still has their support so far. Now, there's only so long that political goodwill capital can run. And I think the Chinese are willing to wait maybe till 2020 to see if they can kind of wait that out.
Scott, switching gears a little bit, talking about oil. Oil is under a significant amount of pressure today, off just over 2%. It's edging closer and closer to bear market territory. When you take a look at oil right now, trying to assess what's going on, how big do you think the downside risk is for crude at this point?
Not much. I mean, we've just come off a significant amount as of late. I mean, where are you going to beat it up to? The old lows around 42 or whatever that was. Here's the deal, though. We all get excited about these things, and you can throw gold and silver and some of the metals in there as well. It's just that we've been in this paradigm of lower for longer, right? And slower for lower and longer. We have had these low interest rates. We haven't had any real low and high inflation. Inflation's been low. We haven't had all these prices really take off on us like we thought we would with these 0% interest rates or ZERP, kind of a policy. And that's been confounding a lot of, especially the people at the Fed. How come we can't get higher, inflation with free money out there? And we're slowly but surely moving back to that, because I'm telling you right now, we're talking about this 10-year yield at 2.12%. I'm getting good information that's telling me that look, this economy, it starts to stumble at all, and you saw that ADP number today. This could see the 10-year yield well below 2%. So we've got a kind of a battle on our hands to see what this economy is going to do going forward in the next 4 weeks, maybe even 8 weeks. It's going to be very, very important to give us an idea about that. The U.S. stock market has been trading a strong U.S. economy, which is looking to slow down a little bit here, which is fine. We're still growing, but not as much. But if it stalls and really starts to slow because of the Chinese tariffs and now the Mexican tariffs, that's telling me that U.S. 10-year really could make a run, say, to even maybe 1.5. So keep an eye on that. There's much more money in the Treasury market than the equity market. That's the truth serum right now.
All right, Scott Shelladio, thanks so much.